What's up, everybody? Steve here with Steve Invests. So you're thinking about maybe buying an investment property to put out there on Airbnb, and if that is the case, then I've got some tips for you. These are in no particular order, so we're just gonna blast through it. The first thing is, I would say concentrate on picking the property type that you're interested. Like, this is a condo obviously behind me, but there are other property types out there, like single family that you can do Airbnb on, as well as like duplex, triplexes. I used to have a duplex over on Fort Myers Beach, and it gave us a lot of flexibility because, you know, one side I had an annual tenant and the other side I had it in a vacation rental program. So it was pretty cool. I had the consistency of the annual rental, and the other side I had the flexibility for vacation rental, as well as the ability for us to use the property as well, which is pretty cool. In any case, you want to make sure that you are allowed, in fact, to do short-term rentals on. So you have to watch out, especially with a lot of condo associations. They'll have these rent restrictions where, you know, you might be able to only rent the property for a handful of times per year, or you know, you might have a minimum day requirement. Like right behind me, this is a vacation rental property, and they have a 30-day minimum rental policy, which is not the best. I prefer anywhere from, you know, 3-day minimum or maybe even 7-day minimum. So you got to watch out for that. And you also have to watch out, even if it's a single family home in a non-association, you're going to want to watch out on any kind of governing entities. It might be city or county rules in terms of how often you can rent the properties out as well. So you definitely have to do your due diligence there. Furthermore, if it is an association, you got to pay attention to, you know, the association as a whole. You got to review their budget, review their condo docs and so forth, because you want to make sure that the association is sound. You know, you don't want to have an association where there's a lot of deferred maintenance. You buy the property and then all of a sudden you get banged out with an assessment of $20,000 to do some sort of like concrete restoration on the property. So be sure that you guys analyze the association in depth if you guys do buy inside of an association. Next thing is, I love to utilize the properties that we buy. That's one of the reasons why I invest in vacation rental properties and Airbnb properties, because it gives you the ability to use the properties. And if that is your goal as well, then you want to make sure that you guys are selecting an area, a location geographically in the States or even outside of the States in different countries. And you got to make sure it's a property that you're going to want to enjoy, that you're going to feel safe at, you're going to thoroughly enjoy. And also the ability to get there easily. If the property is just like super far from your airport, or it takes you 3 or 4 legs in an airplane to get there, then you might not use it as much. So I highly encourage you guys to pay attention geographically where you're investing. The next thing is, if I personally outsource our vacation rental company. It's called iTrip. They handle it. They do extremely well. They charge about 18%, and I'm completely fine with that because I don't have to deal with anything associated with it. They handle the cleanings, the check-ins, the check-outs. If there's an issue with the property and, you know, something needs to be fixed, then, you know, they handle everything, and it's worth paying them. And you know, it frees me up a lot of time to continue to invest in other properties and also just enjoy these properties and enjoy life. So if you guys are gonna outsource management, make sure you guys interview a bunch of companies. See if you can speak to other people who are in that management pool. See if they'll give you some contact information for other investors, so you can call them and get a good feel for you know, how good of a job they're doing, or maybe how bad of a job they're doing. So I would interview at least 3 different companies before you settle on one, to ensure that they're looking out for your best interests and they're maximizing your gains and your return on investment for that property. If you do end up managing it yourself, for one thing, make sure you kind of get an idea of figuring out really how to manage the property. You know, you probably want to watch a lot of videos like this on YouTube in terms of you know, the correct way to manage. Like in the state of Florida, a big mistake early on when I was managing my own was I wasn't paying the appropriate taxes that had to be paid out, and I was getting all these fines because I wasn't paying them out in a timely manner. In the state of Florida, there's 2 different taxes that account for 11%, and those taxes you do pass along to the guest. Just like if you were to check into a hotel, you're going to have taxes that you're going to pay as a guest. It's the same thing, but as an owner, you're going to be responsible for paying those governing entities those taxes. So for example, in the state of Florida, you got the 6% sales tax and a 5% bed tax. So I wasn't paying those in a timely manner. I was getting banged out with a bunch of fines and fees, and it sucks. So that was just another thing that I didn't want on my plate to have to handle. I did come across a website too. It's called Avalara. I'm in no way affiliate with them in any sense, but I think it's up to like 5 properties. They handle basically collecting and paying all the taxes on your behalf and paying the governing entities so they're paid on time. I think it's $20 a month for up to, I think, 5 properties, I want to say, and then if it's over 5 properties, you call and you can get a better deal. I'm sure there's plenty of companies out there that'll handle that too. So if you guys are managing yourself, you might want to have somebody handle that on your behalf. The next thing is income and expenses. Now, you gotta make sure that financially it makes sense. You know, if you're doing this for obviously to use it yourself, but also for these rocks are brutal. You know, you're wanting to do it for investment purposes, right? So you got to make sure that the income makes sense, and if it doesn't, then you know, you probably don't want to buy the deal. So you got to thoroughly investigate the income and expenses associated with the property. Your expenses, you're going to have to take in consideration all your management fees, if there's an association, real estate taxes, small things that you might not think about that you have to put in there, like electricity and internet and cable and water if it's not included in the association fee. So you want to make sure that you are accounting for all of those fees, and also you want to make sure that when you are interviewing property management companies, and even before you buy the property, that you really have a good understanding of a conservative gross income figure, because the last thing you want to do is, you know, go off of a figure of $50,000 and it turns out that that property only grosses about 35, then you're really going to be screwed if you're, you know, really relying on a $50,000 gross income. So a lot of these property vacation rental companies, they can handle doing pro formas based on their research and their experience in the market of what you can anticipate to receive for gross income on the property. But also do your due diligence. There's a website called airdna.com, airdna.com. I'll put a link below for you guys as well. Check that out. It's a cool site. I'm probably going to do another video for you guys on that too, showing you the back end and everything. So basically what that site does, it actually gives you not just rent rates of what things are active on the market, but what they actually rented for. So that's going to just firm up further, you know, kind of double check of what you can anticipate for gross income on the property. And it's always important to double check, triple check before you guys do make a decision on this, because you are investing a lot of money at the end of the day. Next thing is I try to buy properties that are a little run down, maybe a little dated, because I'm able to get a better deal. So I encourage you guys to make offers, make as many offers as possible on different properties, and just try to get the best deal, because if you're paying a lower price per unit, you're gonna have a bigger ROI, a bigger return on investment. And also, I always like to put my own spin on it. So check it out, there's a manatee right here. So also, I like to add my own flavor to these properties. So for example, this property behind me, we're gonna have my guys go in there pretty soon, put shiplap against the main wall of the TV, and then that's gonna lead out into the balcony as well, the lanai over there. So it's just gonna be one big shiplap wall, and we're gonna do some design and everything on it. And it's sizzle features like that that really separate you guys apart. It makes for good photos, and when people see that and they see it's updated and clean, and you know, nice bed, nice linens and so forth, and these features that just add to it. For one thing, you'll probably get a higher per night price, but also you're probably gonna rent faster. In my experience, you're gonna rent faster and more frequently because your property just stands out among all the others. So if you do end up buying a dated property, then you have a blank canvas to go in and really do a lot of different things to it to separate yourselves from the competition. And I think the last point I want to make on this video is whatever you do, don't over leverage. You know, when you want to concentrate on your income and expenses associated with the property, and you want to take a conservative approach, but I don't think that anybody should over leverage any kind of rental property. I know a lot of people want to get in with as little money down. And heck, if you're getting a property that is just a crazy deal and it's so undervalued under the market, then it might make sense to do less money down. But I like to have a good strategy where I'm not completely over leveraged, and just it's a peace of mind, especially if something happens and you know the market dips down or something happens, we go into a recession or a depression or a pandemic, like certain things have happened in the past. You just want to make sure that you can account for a dipping down market. Anyway guys, if you got any value out of this, I appreciate a big thumbs up, and we'll see you on the next video.